The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 92, Nasdaq is up 42, S&P's up 11.5. Gold contract down $19. They're slamming gold out here this morning. Silver down 26 cents, $15, 3 cents an ounce. We get light sweet crude down 48 cents. $58.92. That $60 level is a
little bit of a ceiling, yeah, a little bit. It is.
Notes and bonds. You get the 10-year note down 6 ticks, 124.15. 30 years off 1 at 150.01. And King Dollar. King Dollar's up 487 ticks. You're at 96.770. The euro's at 112 to 1 U.S. dollar. The yen is out here at 110 and a quarter, and the pound is at 130 to 1 U.S. dollar. And get ready for this afternoon because we're all going to see that Lyft IPO get priced out. And last night they're talking about getting priced out at $70 to $72.
Yeah,
folks.
it was originally going to be 62 to 68,
yes.
Right?
Big number.
Demand.
Big demand, no doubt. Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim. And don't forget, folks, every trading day right here, outstanding show. You want to understand options, option strategies, futures, all the above. 11 to 12 Eastern Standard Time. If you happen to be going down that beautiful west coast of us in the looking at those mountains right now, remember, all you have to do is go right on your cell phone, YouTube, go to TFNN.
That's right.
Great, all digital, every single day. Kevin Hinks, what's going on?
I would say that I have 2 words to say about this market, but is buckle up 1 word or 2 words? I'm not sure. If there's a dash in between, I think it's just 1 word, right? This is amazing. We have a lot going on here in this market right now. How about look at what the British pound is doing and what the British pound's doing to our dollar and what our dollar's doing to gold.
There's no doubt,
a massive move in gold.
And what Kevin's talking about, folks, so the pound has just gone from 132 down to 130. You know, that doesn't seem like a lot, but in the currency market, folks, that's a lot.
Big move.
Yeah, exactly. You know, the bottom line is that these people are in dire straits over there.
Right. They don't have, all it tells you, what the currency market is telling you is they don't have it figured out.
No.
And it looks like they're not even close to having it figured out.
When I woke up this morning, Theresa May says she's going to resign, folks, so she could get the votes. Well, guess what? She said that, but she still couldn't get the votes.
That's not enough.
That's a big number.
Yeah, this is going to get, like I said, it's hard for me to continually say this, but this is going to get worse before it gets better again.
Yeah. Well, you know what continues to get better, and I know that, your wife is definitely getting them a lot of business out here, as is many of the wives and girlfriends out there, evidently, is Lululemon.
Yeah. I'm kind of kicking myself, frankly, because there was a lot of speculation about Lululemon, and because they're growing in Europe and the whole Europe thing, I underachieved in looking at Lululemon and doing it, mainly because I underestimated the move. Right? Yeah. The move was $14. I played for about a $10 move on the upside, and it blew through those strikes like it was nothing. I had to scramble to make a couple pennies. But, Lululemon, I'm telling you, this company, and what people should understand is this. It was trading at a lower PE ratio than Nike, and it's about a tenth of the size of Nike, and trading at a lower PE. And this company, if you go to Europe and Asia and all those, Lululemon is exploding over there, and they've seen no drop off in their margins. I mean, this company is outstanding, and it's tiny in terms of float on stock.
Yeah, folks, the bottom line, In 90 days, they took in $1.2 billion.
Not bad.
Yeah, that's pretty intense, man.
It is intense.
And you know, Kevin, what's amazing is that they have actually changed that whole, what do they call it? Athletica. Athleisure,
yeah.
thank you. Right, I mean, they changed everything, right? They're the ones that actually did it. It's like pretty amazing, man.
What they showed companies, and really, I think the company that should really pay attention to this the most is Under Armour.
Yeah.
Because here's why. Lululemon showed that if you make the highest quality gear, highest quality, and I think no one will, that people will pay for it.
Yeah.
If it's the highest quality. And that's what I think that's the niche that they've established, is the highest quality, and people will pay for that. It shows in their numbers.
Yeah.
Yeah, there's no doubt. And, you know, what happens, of course, is that all this gear is so expensive, so if you are paying for something, you want it to last for a while.
Yeah, right.
It's not cheap. Make no mistake. Full disclosure, Lululemon is not cheap. So, believe me, I was there because my daughter, who's 25, that's all she wanted for Christmas was Lululemon gear, and the line was out the door.
Man.
I was the first one in the door in the morning on a Sunday morning right before Christmas, and the line was out the door.
Wow. That's intense. And, you know, of course, what ends up happening, folks, is that when you have dry goods like that, it's not like anything's going bad.
Sure. Especially when people are clamoring.
And they're making good choices in terms of colors. They're making good choices in terms of, you know, quality and everything. I mean, you know, in terms of choosing products and the products that they're putting out, I think they're hitting on all cylinders. Yeah. And now, you know, and what's picking up, shockingly, men.
I was just going to ask you, so they have men Lululemon too, right?
I guess. I don't know.
Yeah.
Okay.
Yes.
And it makes sense in terms of just trends across, like, life, right?
Yes.
As in, people are much more casual, whether it's, you know, in our environment, we're not wearing ties right now, you know, and just and that stretches down the line where, like, you know, in your leisure time, you don't need to wear jeans and a collared shirt when you're just hanging out. Now you can wear, you know, spandex athletic pants and a T-shirt, and you're kind of stylish, and you're
because they are sharp.
Oh, they are. Right.
There's no doubt.
And they've helped change that, but society's in it as well.
And you think you're working out at the same time?
Well, you feel like it. Why not? I'm on my way to the gym, I swear. Yeah.
I know.
I'm telling you, you know, you're right, Tommy. Corporate America even has gone to more business casual than it ever was in the past. Think about this: Goldman Sachs has loosened their dress code, which is an amazing. That right there should tell you all you need to know about where corporate America's dress code is going.
Yeah.
It speaks volumes, and it goes right down the line, right? And they just realized that they were actually, you know, out of whack with, you know, you're dealing with clients and you're overdressed for, you know, almost that unapproachable type aura that is not good when you're closing deals.
You get some young man, young woman, they get a nice company going. If the Goldman, you know, banker shows up in a suit, and the other one can buy and sell them with millions in there in the athletic. It's like, okay, hold on, I want to talk with someone kind of looks like me.
And what they've been able to do to connect the dots between the two is you're dressed casually, but you're not dressed poorly.
Yeah.
Right? I mean, that's what they've been able to smooth that transition. Right. It's relatively well dressed, just very casual.
Still stylish as well.
Oh, it is.
Sure. Yeah.
I'm going to the store right after this.
All right, we're gonna call them up, get them. They should be a sponsor after this segment.
I'm telling you, no doubt. Listen, folks, right here, 45 minutes from now, outstanding show. Kevin, you have a great one, safe one. We look forward to the show.
Thanks for having me on, guys.
Thanks Kevin.
So much. Stay right there, folks. Tommy and I come right back.
The Taz Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow up 64, Nasdaq is up 34, S&P's up 9.5. Let's go. I want to take a look at this gold contract. So,
boy, oh boy. I mean, I know we got the dollar index up almost 500 ticks, but 20 bucks on gold, quite a pullback.
Yeah, and so that's 1.3%. You have some volume behind this move too. It's 275,000. Yeah, this is not good.
Quite a bar.
Yep. Let's see.
Oh,
yeah,
boy.
274,000 contracts. Someone unloaded in this in a big way. This is a big number. So I mean that basically puts game on 1287.
Yeah.
I mean
only
that's
$11.50 from there.
Yeah,
you better believe that's game on with it being down 20 bucks for the day.
And that's a blink.
Right.
Today's Thursday, right?
It is.
Yeah, so that's a blink on a Friday.
Oh boy.
Now the good news is. Yeah, right there. The last time the volume on the way down is 1298.
Yeah, we're right there, right? So,
yeah, so
where did we get down to? I'm just saying, what's the low? 1296 on the dot.
Yeah. Now what happens here? We're looking at this intraday, folks, and like the way I look at the market, that's good. You had to get below your high volume bar and
on lighter volume,
and then you're rejecting it. Now what we haven't done yet. Now this gets kind of interesting, is that what we haven't done is breaking a swing point. I mean, I think it's going to go down there tomorrow. But if you don't break the swing point too, it's like, okay, man, they didn't give it enough. But
sure.
Now, was that when the GDP came out? Let me see.
It may have been.
It started.
Yeah. There's 840. It came out at 830.
Okay.
Yeah.
So the GDP didn't. Well, they're saying it's in line, but it didn't go up as much as some folks wanted it to, I guess.
Well,
right?
yeah, some folks. President, you talking about it?
Yeah.
Yeah. Always.
Final rating 2.2 as expected, but leaves a full year shot of the 3%. That's what they're looking for, right?
Yes, yeah. So you had 2018 closing out with a 2.9% increase.
It's not bad.
No, it's not bad. It's not. But, you got to keep in mind that we looked at it yesterday. I mean, there was a lot of money that got plowed in terms of those buybacks, the money.
Right.
That's, you know, that if it can only pull 2.9 with that type of action in 2018, we'll see what's coming on 2019, you know. And
No,
that's
no,
some
for
of,
sure.
yeah. I'm just digging down. So let's see. The final reading was in line with expectations of economists. That was down from the previous estimate of 2.6 and leaves the full year growth at 2.9. Third quarter growth registered 3.4%. In all, 2018 was the best year for the economy since 2015 and well above the 2.2% increase in 2017. Pretty sure that when everything was talked about, it wasn't going from 2.2 to 2.9% GDP with $1.5 trillion in tax cuts given back to the companies. So it's an increase, but the rhetoric was a lot more than that.
Oh, there's no doubt. There's no doubt.
Yeah.
Natural gas, right?
Yeah, it is Thursday.
Yeah.
Okay, let's do it.
And what's happening here, of course, we're coming into the spring, folks. So
We
we'll
sure
see
are.
where this natural gas baby's going to go.
We got one more trading day in March tomorrow, and then April starts it off, April 1st. Natural gas, we're looking at the May contract, currently trading right at 272. We get the EIA numbers at 10:30, so about 8 minutes from right now. We were looking at the whisper number, jumping around. I think it's on the 1. There we go. So they have somewhere of a decline of about 33 to 39,000 barrels, it looks like. And jumping back. So jumping around to begin with, let's see. We'll start on the 11 a.m.s. 275 is going to be a price point we can use. Now, since we're always highlighting a variety of trades, you know, what lines up nice when you get like 275 is if you want a good risk-reward trade in your favor, right? Maybe you're a little bearish. So what you're able to do is you're able to sell it just under market, right? You're selling it at 271.8.
Yeah.
Market's trading at 272. And look at the risk-reward that you lock yourself in with.
Right.
And all you're doing basically is trading at 2 ticks under the market,
Which is pretty cool.
which is a premium you're paying to lock in.
$32.
Yeah, your losses are capped at 275, and essentially you have unlimited profits. And I say that because you only have until 11 a.m.
Right.
and you have until 2:55. Realistically, it's not going to move 20 cents in a half hour.
Right.
But still, nonetheless, you got 3 pennies of risk to the upside and almost unlimited to the downside. Now let's see how the noons. And I only mention it that way because now you could go the other way, right? This is where you got to make the decision. Let's see. Here's your. Where am I looking now? So I just did the bearish one.
3 pennies to the upside before you're in the money. So this.
Yeah, that's out of the money. You're right. Yeah.
Right.
Yeah, and that's why I highlighted it that way. Now, what I was. Is this the one I was just? No, this is. Now, what's, you know, if you want to be the other side, you can, but this is what's really, if you want to buy this at 272.1, right?
Yeah.
You're buying it a tick higher. This is where I don't understand this side of the trade, right? Yeah, but you know, and the reason why it's a really tight market right now.
Right.
You're literally, you know, which is great for a trader.
It's a tight spread.
Yeah.
It's only 4 ticks.
It's only 4 ticks, which is 4/10 of a penny between the bid and the offer, which basically means it's 2/10 of a penny on each side away from the live action, right? And I mean, realistically, it's actually skewed a little bit, as you would expect when it's near one side, where we're trading at 272. The offer is 1 tick away. The bid is 3 ticks away. Very little premium, which is nice. So jumping around the noons, let's see. Okay, they line up a little bit better in terms of being at 270. You could have your option.
Okay.
Now you're trading at 272 though. Now you could flip this around, right? This is where you want to go bullish. You do have the option to go bullish, right? It's trading at 272 essentially, 271.98. You're able to buy it at 272.4. And look at that risk reward. And you're basically getting in at 272.4 as opposed to getting in at 270.19.
Right.
4 or 5 ticks for a heck of a risk reward. Getting in at 272.4 and you're capped at 270 with those numbers coming out. And the reason I'm going through the directionally is because it might work, but you're pretty directionally biased when you're over 2 pennies away from where you're at.
Right.
You know,
especially in natural gas, folks.
Yeah. Yeah, you know, it would be a bullish trade. Let's just, you know, so noons. Let's say you wanted to set up the volatility. There's your bullish trade, right, from 270 to 290. Here's going to be your bearish trade from 270 down 250. And what happens is this is a pretty bullish directionally biased in terms of you have such a head start.
Right.
But you almost have like an insurance premium on the downside. If you really get a tank, you might get some value back. And
And you know, it's intriguing. I mean, we looked at the chart beforehand. My take is that we're actually going to go down.
Okay.
And we've been down quite a bit. I mean, but it's the way that this chart seems to be set up. It's like, okay, it seems like we can get some down action.
And what happens is the dailies, they both line up with 270 being the price point. And as we're saying this, man, we're creeping. We're going to be at 270 by the time the numbers come out.
Right.
And let's just see, because we're less than a penny and a half actually away as we creep down further and further. This would be your bullish trade. And you got 50 cents now until 230, and then this is going to be your bearish trade. You got 50 cents again to the downside. That one's going to cost you 9 because it's so far out of the money. You're looking at $32, which is 3.2 pennies away from 270. And you got until 230, and again, you essentially have unlimited profits because you have 50 cents of movement.
Now that's not a bad one.
No,
that's not a bad.
And it's especially not.
There it is.
That's
we just hit 270.
Yeah, it's especially not because we're now under 1 penny away from market.
Right. Right.
And looks like you've been right for the last 10 minutes in terms of going down. We've just moved almost 2 pennies. But yeah, just recalibrating it, that would be a bullish, such a bearish. So yeah, $31, $32. So we'll be looking for about 3 pennies of movement away from 270.
You'll love it.
We'll find out.
Our phone number is 877-927-6648. We have the Dow Industrials right now up 75, Nasdaq's up 31, S&P's up 10, and King Dollar up 397 ticks, 96,680. Now, the number to watch is 96,685, folks. That's the highs of February 15th, which it went over today. It's going to be interesting if it can't handle that price. Tommy and I come right back, folks. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So EIA, natural gas stockpiles fell 36 BCF. And that was what they were looking for,
Pretty
right?
close to estimates, right? The median estimate somewhere around 39. I think you had the Bloomberg survey, 33. So literally right in the middle of those two. Jumping back to the chart, that's our gold, not jumping to gold. Where's our natural gas? And we got the contract right at 272. So that's kind of right where we came into as we were looking at it. We did get that drop all the way down to 270.80 right before the news. Trading at 272. No huge reaction, as you might expect with the headline number. Now we'll see as they dig into that report a little bit throughout the hour, but no huge reaction nonetheless, yeah.
Boy, I'll tell you, man, the natural gas, imagine, you already made it through the winter. I mean, and, that's not a draw, like a big draw, that's for sure.
Sure.
And now you're coming into the spring. It's like, okay, because look at that chart, man. I mean, it's, the lows are just sticking out here. I mean, it already made it up to 289. What was that? That was March? Well, that wasn't that long ago.
No.
A week and a half ago.
Yeah, it's been quite a pullback.
Yeah, pretty amazing.
Yeah.
I want to find this story. I had this story this morning. This is about one of the, you have these money laundering scandals over in Europe in a huge way, and in Sweden. Where do you see this, folks? In Sweden, this is unbelievable. When you talk about Swedbank has fired its chief executive amid allegations the bank was used to launder billions of dollars
in Russian money.
Yeah. Now, when you do the numbers on this, folks, it's hard to comprehend because I'm going to pull up how many people are in Sweden first again, but it's like a very small number, and when you see what the allegation is that they were laundering about...
I think it was right on the bottom there.
I was figuring 500 million a week for years.
The bank is alleged to have handled as much as 20 billion euros, which would be 23 billion US, in questionable funds each year between 2010 and 2016 in Estonia. The figures are considerably larger than the first thought, and come amid reports that Swedbank allegedly also misled U.S. authorities regarding its suspicious customer activities.
Just imagine 6 years, because the average is that's 500 million a week.
Yes, right. So the allegations tie Swedbank to Danske Bank's 230 billion Estonian laundering scandal.
That's even bigger.
Who ran Swedbank's Baltic banking operation in 2011-14, is being kicked out after trying to deny any link to that case. She was named CEO in 2016 following the departure of her predecessor. And I guess the predecessor was briefly investigated for questionable transactions, but the case was subsequently dropped. I imagine they're going to look at that one again as all of this comes.
Well, it's amazing that they've been so insulated. This has been going on now like 3 or 4 years.
Yeah.
It's like, and now it's only coming out that the numbers are so gigantic.
Yeah. So they're being investigated by financial supervisory authorities of Sweden and Estonia, while the U.S. is also looking at the case. That follows claims that the bank was a conduit for some of the former Soviet Union's most notorious strongmen, including Ukrainian President Viktor Yanukovych, former Trump campaign manager Manafort. We know where he ended up. Also reportedly received money via the bank. I'm sure, man, if they were doing
a lot of people
$20 billion, they're the few of the high flyers around the world in terms of illicit funds going through that avenue for sure. Pretty remarkable. Let's check back on natural gas, see if we're getting any action. Yeah, 272. No action on that number.
Yeah.
Yep.
So let's go take a look at some of the. And Facebook is just brushing this off. So this is Facebook.
The whole world already knew that they were going to get sued by somebody. Why not the U.S. government?
Right, and this is over housing bias, folks.
Yeah.
And so this is HUD, the Department of Housing and Urban Development. It's charging Facebook with allegations of the Fair Housing Act, which restricts how you can put housing-related ads. And so, of course,
So they're saying that they enabled and encouraged discrimination based on things like race and religion, as well as sex, restricting basically targeting ads for that type of which you're not allowed to target ads.
Yeah, and I wonder what Google does, because when you're targeting ads, in general, we can pick what we want to go.
You cannot pick race, religion.
Oh, no.
Sure. And when it comes to housing, you definitely can't. Like this.
I understand you can't do that.
But that's what this is exactly talking about. Like housing in particular, because this is fair housing. So stay within, the exact. If you're selling ads for housing, okay?
Right.
You can't differentiate even by gender, okay? Because that's different. If we're selling stock advice, you might be able to say more men. Poker advice, more men. You can't say more men want to live in my apartment, okay? That's fair housing. That's where things get...
So evidently, yeah, because like if we're targeting financial people, you can target zip codes, you can target that.
Right. And you can target gender, and just to put it over, okay?
Right.
But that's because, like...
Yeah, so evidently
it's
on
there's
platform,
no fair stock trading housing act.
They didn't change. No, it's a big deal.
Oh, it is a big deal.
There's no doubt.
It's a huge deal.
There's no doubt.
It's a huge deal. And especially because it goes further than sex and it goes to race and religion. But you said positive for the day, Facebook. Why not? Facebook spokesman said in a statement Thursday the company had been working to address many of the issues raised, citing a decision last year to eliminate targeting options that could be misused.
Last year.
I know, right? We just discovered in 2018.
Yeah.
Right?
Yeah.
And they're surprised by HUD's decision.
I'm telling you, man. Pretty wild. And the lift thing this afternoon is going to be wild watching, folks. Okay, because
a lot of talk about that, man. And
well, yeah. So, 10%. That's all that's getting pushed out.
10% of the company's getting pushed out in shares.
It looks like they're going to price it, at the high end, which is a big deal.
And they're probably not going to be voting shares too, right?
No, they're not. Yeah. That's right. The owners, it's super voting rights.
Yeah,
the whole
that's the new trend.
Yeah. So,
I'm not sure I'm a fan of that trend, but eventually investors, I believe,
as a shareholder, you wouldn't want to be.
Eventually, I think investors are going to fight back, because you see when things happen like Facebook, where you just, you have no governance when one person. Yeah. And guess what? That's your private company. That's the deal.
Right.
But you don't get to become a public company and then say, I still make all the decisions. It's supposed to be.
And that's where, there's more demand than there is supply.
Oh, they're getting to do it. As long as people keep buying their shares, it's going to happen. I think you'll see enough bad stories that there's a reason why you want corporate governance, and we see that come up as well.
Yeah.
Yeah.
And then, of course, you're going to see Uber. Uber's going to, I don't know whether it's going to be 3 weeks, 6 weeks, but it's going to come right after them,
And they're like 3 times the size of Lyft, right? I think Uber's like 120 billion something, and Lyft is like 30 to 40 billion.
Right.
And who knows, Lyft's probably going up after this pricing.
I would say
for sure.
I would say so.
But I bet Uber's is going up too if Lyft's has gone up. So
Uber was smart getting this thing out first.
Lyft, you mean?
Lyft, yes. There's no doubt.
Yeah.
Because you go back, you go back a couple of years, and Lyft just seemed, okay, this is the new kid in the block, and now publicity-wise, there's going to be a lot of people that actually use Lyft. Yeah. Because it's like, oh,
for sure.
They're a public
They're
company
in the press
now.
a lot, right?
Yeah,
so can't hurt.
No, it really is pretty wild.
Yeah.
Let's go over and take a look at that U.S. dollar, because I have a feeling that this is the February 15th deal that it tested, and I don't think it's going to make it. Is that February 15th? Yeah. So 96,685. Yeah, that's the number, man. We don't have the volume, so it's going to be intriguing if it can't hold this price. Because what that high is, that's the high that got taken out, and that's when it got taken out with conviction that it should have been able to go a lot higher. Yeah. And that was taken out on the 7th, and it just gave it up. Yeah. So it's going to be intriguing watching this, and of course this is still about Brexit. Those Brexit.
They have not figured it out.
No, they haven't.
Not yet.
Not even close.
Not even close.
Stay right there, folks. Tommy and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow up 83. You get the Nasdaq up 39. S&P's up 10.5. Let's go inside the NDX 100 and see what's driving that NDX out here today.
Lulu.
Oh, look at that. Lululemon up 16%. Wow, man. Mercado Libre is up 2.5. You got Broadcom up 2.2, and Xilinx is up 2. On the downside, T-Mobile is down 2. You got Liberty off 1.3, and these are all tied, actually. Well, Fox is a little... No, Fox is different now. That's down 1%. Netflix, NFLX. Let's see what good old Netflix is doing.
Yeah.
Flat market, yeah. Apple, who thinks they're going to take on Netflix, which I think they're dreaming, but $188.62.
The margins, man. A lot of talk about Apple, and Apple has made so much money because their margins are incredible, right?
Yes.
You sell these phones. That business is a loss leader right now. So that factoring into things should be a little dicey if you're an Apple owner or a shareholder.
Right.
Because you want to start competing with Netflix to spend $10 billion a year.
Right.
And hope that you get the business off it, and they might. I love Apple, right?
No, I'm with you,
but there's some things.
But you need the subscriptions.
Things have to play out, right? And even the Apple Pay, right? So their credit card, I think you get 3% back if you pay with Apple Pay, if you have their credit card.
Yes.
They want to get people on Apple Pay.
Right.
I read they only have like 35 million people using Apple Pay, which is like nothing when you think about how many iPhones are in people's hands.
Device. I think it's 1.2 billion
right,
devices.
and then if you start comparing it to apps like Venmo, right, which is PayPal's kind of online easy, that's like 260 million people using it.
Is it?
So they're way behind. So they're trying, as in, it's just a statement to like, just because they have phones in everybody's hand, you think they could make the easy transition for payments too, right? People open their phone, they use Venmo.
Right.
They don't use Apple Pay.
Right.
They haven't made that switch. making that switch from Netflix, Amazon Prime.
Do you use any?
I have used Venmo. Yeah, somebody sent me money yesterday.
How does that work? Like
you can transfer it from your bank account to the person's completely fee-free.
You set up an account first.
You set up the account.
You set up the account.
But it's fairly simple in terms of just sending money electronically. I mean, that's the future, and that's why Apple they're trying to introduce a credit card, higher rewards to get people into the habit of doing it, right? But it's fairly simple, and they have some competitors.
So the Venmo, if I set it up, is it set up? So I got the app, and then it's set up with my
tied to your bank account.
I got it. Okay, cool.
Yep, and there's some of the banks have, I think it's Zeal. There's another one, the Wells Fargo, kind of there, along with a number of other banks. And just the point being, I mean, it's remarkable Apple can't get more than 30+ million people using Apple Pay when you have so many devices in people's hands.
Oh, yeah.
And I wonder if they're going to face the same headwind trying to get people into their content just because you have their phone. Because I have their phone, and I'm not signing up for Apple content on day one.
Yeah.
I can barely keep up with the amount of great shows that Netflix and Amazon have, which I have both.
And I think what happened, well, I know what happened, is that when they first had Apple Music, which everyone loves and has, no one else had anything. That was the beginning.
Yeah, yeah.
You know, now they're trying to get into everyone else's business, and it's like, okay, you know, you're already used to something else.
Yeah.
So.
And even the music, you know, they have a lot of subscribers. They do, but Spotify's doing very well, man. You know, they haven't like just come in and taken it over.
I listen to Pandora.
Right, Spotify, Pandora.
5 hours a day, and it costs me nothing.
Right.
It's like, wow.
Yeah, yeah. No, for sure.
Every single time it says, do you want to subscribe now? I just go, nope.
Yeah. And then Amazon, I have Amazon Music. Now I have the free one that comes with Prime.
Yes.
Okay, so you don't have every catalog, but you want every catalog, you can sign up. I've used Amazon free one. It's actually great. I found a lot of great songs. Okay. So that's there as well, as in lots of competition.
Yeah, Apple's got a road to hoe here. There's no doubt.
But like Kevin said, you got Steven Spielberg making movies for you, man. Maybe that's a way into the door.
Oh,
right? There is for sure.
We take a look at the small caps out here. Small caps still having a hard time getting any traction going. You know, IWM right now. This morning you hit a high of 152.93, and it got over the high of Tuesday. We'll see whether it can basically stay there. You know, you're slamming into this downdraft with 40 million shares. Right now we're down 5.6.
Yeah, that's last Friday.
Yeah, and so you know what you do have out here. I expect you know the IPO coming out. They'll keep this market stable. They're going to try to keep it as stable as possible. Last night overseas, now this is kind of interesting, you had Asia get hit again.
Okay. Oh boy, yeah.
You know, the Nikkei was down.
Yeah, all of them like 1.6.
Yeah. So if we take a look at this Nikkei.
Look how every sector too down, but basically 1.6. Yeah.
Yeah. So you know.
Yeah, right down at that important level of it.
Yeah, it is. Yeah. And you know, now the yen. Let me just look at this yen for a second. See the yen. Yeah, the yen, it's interesting. You know, normally when the Nikkei is down like that, you see the yen get a lot stronger, but it hasn't. I mean, it's 110.73, you know. Yeah. Most times when you see the Nikkei down 1.5% or 2%, you know, the lower price on the yen, folks, means that it gets stronger against the U.S. dollar, and the Nikkei takes absolute conniptions when that goes on.
Yes.
Yeah, it's pretty fast and furious.
Checking back in, no action, man. Look at that bar. Every single one of them since that 10:30 news, just sitting right at 272. Yeah. No real action on natural gas. We'll see.
Laying there.
So, Mr. Basil Chapman.
Oh, good.
He's doing double duty for Mr. Larry Pesavento.
Yeah,
Larry,
Larry's on his way back.
He is flying back from Hong Kong. Speaking of Asia, and so Larry will be back tomorrow morning with Trade What You See at 9 a.m. Basil coming up at noon with Tiger Technicians Hour. And 6 days from today, Wednesday, April 3rd, he'll be in there to the opening call. Anything goes, the stock market's key phase. And I encourage people, check out the opening call. Great service by Basil. He's posting charts every morning. I believe he's usually posting updates even Saturday and Sunday. And for that workshop, just a variety of things. Where we are in the market, talking about the technical tools, the Chapman Wave, and whether it's MACD, stochastic, right, that Basil's always using, that show you where the market's going to be heading, the outlook for this year, and I know you guys even listened to your interview Tuesday, right, on Wednesday, 2020, man. It's coming. What are we now? It's going to be April. We're going to be 8 months away on Monday from the year 2020.
That's intense.
It is. But what's happening in 2019 this year? Through next year, risks versus rewards that Basil's looking at, specific sectors, including FANG, Facebook, Apple, Netflix, Google, and of course it'll be archived. And as I mentioned yesterday, you sign up now. There's 2 archive workshops available for subscribers immediately. If you're already a subscriber, you're all set. You gain access to it. You'll see that link on your member page on Wednesday, and I encourage people to check that out. Sign up, 30-day money-back guarantee, nothing to risk, and you can watch those 2 90-minute archive workshops over the weekend. Get ready for Wednesday. Get ready for 2020.
Oh my God, that's amazing. And
It is, man.
we bring up this. It's going to be interesting. So the the S&P, we got to well the high end was 28.24 today, and right now you're right in the middle of it. And you can see if you take a look at the range, the range yesterday was up at what 28.31.
Yep. That was early, 2:30 in the morning. But even we were almost back up there at the open again, and then all the way down.
Yeah. So it's going to be intriguing. To see 8 points, it lays around 8 points, that's fine. You get down to about 5 points, then those bears are going to say, okay, man, let's see if I can just get it flat once again. Because if this market stays flat like it did yesterday, today, and then tomorrow with this IPO coming out, watch out for next week, folks, because it's like, okay, they're holding it by the threads.
Pretty interesting. A lot of people clamoring. I want my foot in ownership of ride sharing, right? You got to. I mean, talk about demands.
Oh, huge. Stay right there, folks. Tommy and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials up 51, Nasdaq is up 22, S&P's up 6.5, And we get a flat market out here.
Not too much action for this hour, basically, in terms of we were sitting up 80 points in the Dow when we came on. We're up 50. Dollar index was like up 450 ticks. We're up 400.
Yeah, we take a look at some of the higher volume equities, and it's all about Lululemon out here. Look at that thing.
Right?
Up $23.
Yeah.
Verizon. So what's happening with Verizon? Let's see. Verizon's down $1.75.
Okay.
Let's see what this is looking like. No, it was that high. So it's just a pullback here. Let's see. No, really just.
Yeah, there's no.
Yeah.
Just selling, which is quite a sell in terms of no news.
No, it does. And you know, if we put this back, it's probably just the top of the consolidation. Yeah, it is.
Yeah, I mean, it's nothing that you're too worried about as a shareholder in terms of what are you back to Monday's action when we're at basically highs?
Last high up here. That's going to be the week of
61.58.
Yeah, 65 million.
Okay.
We did 73 last week.
And what did we get to here? 61.19. Okay. High was 61.58.
This is still, it's a consolidation though. You can see, look at these two. You get the high volume low there. Not there though.
Yeah.
Here. So yeah, you can get back to 57 maybe.
Oh yeah.
54 somewhere.
Nothing to worry about in terms of.
And these, it's probably
Verizon's
still paying
doing
4%.
just fine.
Look at the 4% dividend.
Yeah, they're doing just fine. It's like
these dividends with these phone
they
companies.
are. Yeah. They got quite and almost a monopoly, right?
No doubt.
Yeah.
Stay right there, folks. We got Fast Market coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
Go get 'em, folks.